is up, everybody? I just recorded this whole video. There was no audio, and so now I have to record it again. But it's a beautiful day, beautiful Wednesday, January 18th is the day of right now. And essentially, I want to show you guys a tutorial for the Jimbo high probability scalping strategy. It's a pretty simple strategy. I'm just going to go ahead and show you it on the charts of today from 8 a.m. to 9 a.m. Central time. Right now, it's 9:17 Eastern time, 8:17 Central time. So it's pretty decent little strategy here. I just need to go over the basics of the strategy. So the only indicator I have on right now is the Jimbo filter divergence indicator. These are my settings. So I'll just pause for a second so you guys can copy these settings here. Okay, if you need more time, you can go back, pause the video, whatever. So to break it down, we have a VWAP, which is the gray line at the bottom. The VWAP is the average price since midnight. Each day it resets at midnight. So it's a good indicator of what the average price, how the price is moving today with no correlation to previous days. The EMA 50 is the average of the last 150 candles, which is a pretty good average of what's been going on the 1 minute for the past 2.5 hours. The EMA 50 is the same thing as the EMA 150, except for it's the average of the last 50 candles. That's not so necessary to the strategy, but it's just a good kind of indicator to keep up on your screen to understand how price is moving. And then the most important thing here we have is the range filter. The range filter is a gray shaded area in the background here, and the RF50 or range filter 50 is the line in the middle. The line in the middle of the range filter is our buy and our sell signal, all right? And the gray area is kind of like a cautionary tale. You don't want your VWAP and your EMA too close together, and you don't want them in the gray area. What you want is exactly what you're seeing now. You want the VWAP, the EMA, the price fanned out. Okay, I'm going to put some stuff up on the screen here real quick. If you're looking for longs, you want your VMA or your VWAP, your EMA, then your price. And if you're looking for shorts, you want your VWAP, your EMA, and then your price. Something that's important is you want your EMA and your VWAP fanned out, okay? Because you want there to be a clear trend. You want them to both be going up in parallel to each other with a good gap and trend going on here. All right, so what this strategy is all about, it's about trend scalping, okay? Trend scalping. So what that means is obviously we need to determine a trend, and then we're gonna bet with the trend as it goes up, okay? But what this strategy does is it looks for when we're trending, it looks for that little pullback, because in order for price to keep going up, it has to come down a little bit to offer price to people at a lower rate to get more people to buy in to keep going up. So I hope that makes sense. So as the price is going up, it needs to dip down, collect some revenue, some liquidity from people, and then it needs to continue back up, all right? So obviously, if you see the chart here, it goes up, it comes down, it goes up, it comes down, it goes up, it comes down. And when it goes down, before going back up, that's where we're attempting to get in. So we're using the EMA 150 and the VWAP to determine the trend. If you look at the top of the screen, you're gonna have these triangles, X's, or red triangles. Green triangles, red triangles, or X's. If the triangles are green, that means it's likely the EMA and the VWAP are upwards in the same direction. If the triangles are X's, or sorry, if the things up here are X's, that means the EMA and the VWAP are kind of flattened out. And if they're red, that means the EMA and the VWAP are pointed down. It's always good to confirm the EMA and the VWAP with your own eyes, but this thing at the top here is pretty good. So when you have green arrows, that means you're looking for longs, okay? Longs only when you have green arrows. So let's go ahead and say we're gonna start trading at 8 a.m., all right? Let's wait. We're gonna wait for it to break down below the range filter, which it already has. And now as soon as it goes back above the range filter here, we wanna enter a trade. Our stop loss is always gonna be the recent swing low, and our ratio will always be 1.5, and hopefully you guys are trailing after that. This ends up being a losing trade, but we do get another opportunity right here. This trade also seems to be a little bit, or not a little bit, this trade is also a losing trade here. So at this point in time, you have two losing trades. You're entering, you'll see here, it breaks the range filter, it comes above it, you enter. It goes back below it, comes back above it, you enter. At this point, you have two entries, which both of them get stopped out by this lone red candle here. However, this lone red candle breaks down, it breaks above here, and if you were to enter here, which obviously you would, you set your stop loss at the bottom of these candles, and you'll see here, you get your first win, all right? Now, you see it breaks below the range filter here and breaks above it, but you have to remember this is extremely skewed because of this giant candle. It's dragging the range filter. So I wouldn't necessarily say too much that this is a break, and I wouldn't have entered here, and neither should you. And you just need to kind of pay attention. Like, look, this huge red candle here, it's like it's just messing with this range filter. So this isn't a very valid point. Then you're going to come into a little period of indecision. Bing, 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 bing. You want to wait for this green, and right here you get the green and it breaks the range filter. You're going to enter there. You're going to set your stop loss at likely this low here. You're going to go for 1.5 and you're going to get it no problem. And it looks like that would be, see, all the trades for the day. So one of these would be break even. Something to add is as soon as your trade gets to 1R, you're going to want to exit your trade. So, or you're going to want to set your trade to break even. So as soon as you get to 1R, which is 100% gain, you want to set your stop loss to break even. That way, if it goes all the way back down, you're not at a loss. Okay. But overall, other than that, you would have got 2 wins, 1 break even, and 1 loss, which is really good, actually. I mean, each of your wins is 1.5R. So you'd have 3R minus 1. You would have 2R for the day, which is more than enough. So to recap, the strategy is simple. EMA, VWAP, and your EMA to determine your trend. Then you have your range filter, which is for your buy and sell signals. All right. If it breaks below and then breaks back above the range filter, it's simple. You want to enter. All right. That's everything here. You determine your trend and you're entering on pullbacks, and that's it. I'll make another video where we have some additional kind of confluences, but for the most part, that's just kind of all we're doing. So thank you for watching. I hope it works out for you, and stay active in the Discord. If you have any questions, let me know, and let's make some shmoney.